Well, good morning or good afternoon, wherever you're at. Good afternoon, Brenda. How's everybody doing? Let me know. Okay, good. You can over here, Kevin. How we doing? Good, good, good. Let me get this things all organized here real quick. Well, welcome out to Trading Coaches Playbook. Got my coffee. I think it's cup number 3, maybe 4. I can't remember. I lost track this morning. So, yeah, it doesn't matter. It doesn't do a whole lot to me. So, let's jump right into it and get the disclaimer out of the way. I am not a registered broker-dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. On the side instead of the top of the slide. Really? Okay. Huh. I don't know that it doesn't show me where I show up. It shows me what the screen looks like, but that's it. I don't know where I'm at as far as the video part goes. I don't know that I have any control over that. So hopefully it's really small in the corner. So I'm not covering anything up. But for some of you, I know many of you have been around a long time, so some of this will be pretty elementary, but we'll still have some fun. We'll go through the PowerPoint pretty quickly because it is well, let me know if it is interfering. So I don't know if there's a setting in there that I can change it or not. Let's see what it says under more. See anything. There's info. Hide video panel. That might be better. I don't know. Yeah, if it becomes a problem, let me know. We'll figure it out there. But if it's not a problem right now, then I like being on the side. I like being like just hiding out over the corner. That's the way I usually do. If I ever go to workshops myself, it's like I'm always one hiding in the back corner. So I don't like the front. I never have. So maybe seems a little weird, but at the same time, it is just I'm more the like fly under the radar kind of guy. That's just the way I've always been. So it's anyway. So here's what's coming up. Premium online workshops got Inner Circle. Check in the 26th at 7. Monthly is August 27th at 8. E-mini Think Tank with Brandon Q&A is August 26th. Mastermind Group the 27th at 8 p.m. Monster Market Movers the 28th. These are pretty much all at 8 p.m. I'm going to stop saying 8 p.m. unless you guys can all read it anyway. So Trading You the 29th. That is, I believe that's the one that I'm doing. And then Power Option Plays Monday and Thursday. Covered Call Explorer with Trip on Thursdays. The free online workshops, Power Hour with Rob on Mondays. And then Trading Coaches Playbook, this one every Friday at noon. And Art of the Cash Flow is August 30th at 8 p.m. And then E-mini Think Tank with Brandon is every Monday, Wednesday, and Thursday. So most of these are pretty standard, but some of them do change up a little bit here and there. So it's always good to know what's coming up and what needs to be on the radar. So of course, you can find Wealth Builders on all the social media platforms. I'll mix up water with the coffee. And if we haven't met, I've got a few different tools for you. Patterns and flashes, all technical analysis, right? If you're new, or even if you're not new, if you've been around for a while, it'll not only train you to recognize the patterns, but how to trade them, how to analyze them. We're going to touch on some of that today, with regard to candlesticks, at least interpreting candlesticks. So best thing you can do with that, as far as I'm concerned, there's quizzes in there as well, which I put in just as a way to get feedback for yourself. So once you go through there's 68 hours of video in there. It's all on demand, right? Once you go through it, then you take the quizzes and see if you retained all the information, which I was not a fan of school. I hated tests, but then here I am putting tests in there. But it blew my mind how much people love the quizzes. That's probably the number one thing people respond to. I love the quizzes, but it's a good way to figure out and gauge whether or not, where you're at as far as your technical analysis knowledge. So thank you, Alyssa. There is a link in the chat. You got a 2-week free trial. So you can, what I suggest to people is take the trial, go do the quizzes. There's 4 different quizzes. There's 4 different sections in there. There's basics of just basic technical analysis. There's basics of candlesticks. And then there's all the different patterns. So there's 4 different sections. And there's 4 different quizzes that are relative to each of those sections. So I say take the quizzes, If you pass them with flying colors, if you get 100% on every one of them, then maybe you don't need patterns that flash. If unless you want to just train your eyes to see the patterns better. But um, if you don't pass them, if you don't ace the quizzes, then maybe you should keep it. So just a suggestion. Weekly Whispers, something we launched at the beginning of last year, which I something got filled. I do my analysis once a week. Okay, I'm a patterns trader. I look for patterns, set up trades according to that pattern, and then watch those for the entire week. And that's all I trade. I mean, something pops up in the middle of the week. Obviously that would, if it looks good, but for the most part, those are the patterns. Those are the trading candidates for the week. I used to do it every day for a time, but it just became overwhelming. So I'm like, okay, it's too much. It takes me, 2 hours on the low end. Typically 3 to 4 hours is what it takes to do it. So doing that every single day is just too overwhelming. And the patterns really don't change that much, right? So essentially, I do my research once a week. I do a recording. I did it last night. I do recording. Here's what I found. Here's a macro picture. Here's what I see with the overall economy. Here's what the big picture. Here's what the indexes look like. Here's my opinion about what's coming, whether short term, long term, to try to cover every base, right? And then here's the candidates for the week. We go back and review last week and what we did, this and that, and then candidates for this week. So if you want 20 or 30 candidates every week and explanation of why they're candidates, then that's what that is all about. So Small Accounts Big Return is an on-demand 2-hour class that I did, I don't know, a year or two ago. It's all about working with a smaller account. Some of the nuances that you'll need to incorporate into doing that if you're working with a smaller chunk. There she is, Brenda. I figured she'd show up eventually. She usually doesn't stay away. It's been relatively cool. It's actually been raining. This whole week's been cool and rainy for the most part. It just drizzle. So it feels like wintertime here. It's gray and rainy, which is what we get in the Seattle area, right? We don't get a lot of volume of rain. It's just a mist for like days and days on end. And the clouds are out. We don't see a lot of sun. So this summer's been really weird. July was really hot. We were in the 90s a bunch, which is usually not normal. August is typically the hot, where we get 90s, a few days of 100. And then it cools off in September a little bit. We still get some heat, but July was our hot month. And now, I mean, we're in the last quarter of August, and we have, I think the hottest we've been is 85 or 86. So it's a little weird. Sounds like other people in the other parts of the country have had the same kind of weather. I was in Montana last week, and they said the same thing. It's usually really hot in August and not too hot in July. So they're very similar to us, and they're having the same weather we are. Yeah. It's all that climate change. It's all those Teslas wrecking the environment. Whoops. Not supposed to go there, huh? No, you don't, Brenda. She's jumped down from there and landed on my back a couple of times. And her claws are sharp because I've trimmed them once when I first got her. And yeah, it doesn't feel good. She stabbed me in the back. Yeah, it's not good. She has knocked that Albert Einstein photo off on me a couple of times too. So I finally got it situated where she hasn't done that for a while. So yeah, it wouldn't be good because I might say some choice words that wouldn't be that shouldn't be heard publicly because it hurts bad. It's like getting stabbed in the back with a knife. But interpreting candlesticks. So again, for a lot of this will be review, and we're just going to breeze through this pretty quick because of it's pretty elementary for most of us. So, but it's good to review this though too, isn't it? Once you've been doing this for a while, and sometimes you go, oh, that's right, I forgot about this. Some real basics, real core stuff that is the most important. The open and close, when it comes to candlesticks, are the most important part of the day, right? They're the most emotional parts of the day, right? That's where, overnight news is being filtered out, right? So anything that comes out overnight, especially we just finished up earnings season, we've still got a few left here and there. But for the most part, the earnings stuff that comes out overnight gets filtered out, and that's when you see big gaps, right? So that's important to understand, right? There's the old Japanese proverb, which if you're not familiar with candlesticks, they were developed by the Japanese like 400 or 500 years ago to trade rice futures or something like that. It's been a long time since I read books on candlesticks, but they basically say the first hour of the morning is the rudder of the day. So how the day starts out is generally speaking how it will go, right? Not always, obviously. Yesterday's a perfect perfect example of how it's not, or it can be something different. Yeah, turn that down. That's nice to hear, though, when target's filled. I don't think that'll affect the audio. I think that's just a speaker. I'm turning down. But yeah, look at yesterday. I mean, we gapped up and then sold off all day for the most part, on the at least on the index. So, and tons of bearish engulfing patterns out there. So it doesn't necessarily mean that it is, but generally speaking, it is, right? There's the old saying, right? The trend is your friend. Well, if we run up in the first hour of the day, it's not uncommon for that trend to continue. So, but it is the first hour, not the first candlestick. So if we start off bullish in the first hour, it's not uncommon for it to finish. Yesterday, we gapped up and then started to sell off for the most part. We didn't move much higher at all. The NASDAQ didn't move a tick higher even. But some of the other ones ticked up a little bit. The Dow moved a little bit higher. The SPX ticked up a little bit and then rolled over and sold off all day pretty much. The close is emotional, right? And that's the key word, is emotional. Technicals are a visual representation of the emotions of the traders, right? And that's where candlesticks become very powerful, is because they give us great insight into what traders are feeling on a very short-term basis, right? Can be from minute to minute, but it's a lot easier. A line chart doesn't tell us much because it only gives us the close, right? We get one piece of data where candlesticks give us 4. So we can get a better feel of how traders felt throughout the day by looking at a candlestick, right? The close emotional, because it's margin calls are based on that. So if you're on the edge of getting a margin call, if you might be getting a margin call and you're at the close, what are you going to do? You got to make a decision, right? If I don't close it out, I could get a margin call. If I do close it out, whatever the case is. But, and the interesting part there, the last one, is pattern names sometimes describe the emotional health of a stock or the market, right? I mean, does a hangman sound good or bad? Doesn't sound very good, right? Sounds pretty gnarly. Whoops. Activate the right screen. So basic construction, you got the real body, we also call the body, right? And you got the upper shadow, sometimes called the wick, the tail, whatever you want to call it, the lower shadow, same thing, basically. One's at the top, one's at the bottom. So you can call it whatever you want. I bounce between shadow and wick, same difference. Bullish, bearish. Bullish is the open candle, the white candle, the black candle, the dark candle, the filled in candle, whatever you want to call it, if you have colors. If you want to be OCD, like I am, technicians, technical analysts, whatever you want to call them, use black and white candles. The colored stuff, people that, well, and that's just old school. That's the way most of us learned. I started 25 years ago almost. We had black and white. We didn't have color. A lot of people use color now, but the old school people that have been around for a long time, like me, it's like, no, color is not real technical analysis. That's fake. It's black and white. But it doesn't really matter. As long as you understand it, you can interpret it. That's all that really matters. I'm not that OCD. But a bullish candlestick, the open is the low, the close is at the high, kind of like a helium balloon, right? You put an air in it, it goes up, right? And then you got the high and the low. That's what the wicks or the shadows represent, is the high of the day and the low of the day. Bearish candlestick is the high and the low are the same. The open and close are the opposite, right? So we use the old lead, it's putting lead in the balloon, right? It goes down, right? So the high and the low are the same, but the open and close are opposite. So that's a bearish candle, generally speaking, right? There are the exceptions, of course, where, you might have a huge gap to the upside and then you get a bearish candle like this, but technically it was up for the day. Shaved heads, shaved bottoms, those are an indication of strength. Now we're getting into the interpretation part. Whenever you see something, a candlestick that opens or closes on the high or the low, that is an indication that whoever was in control, for example, the shaved head, this is the bulls are in total control. They close it right at the high of the day. So that is very bullish, right? It indicates that they had the strength. They had the power going into the close. Opposite on the bearish one, right? If the bulls or the bears are taking it lower, I mean, the NASDAQ, we'll get to actual charts here in a minute. That's what kind of just breezing through this review, and then we'll go look at charts and then just open it up. But Maribozu is the ultimate strength for the bulls or the bears, right? It opens on the low and closes on the high, or opens on the high and closes on the low, depending on which one it is, right? Where there's absolutely no shadows. So that is a very, very strong. So when you're interpreting candlesticks, if you see something like this, or almost no shadows, right? It depends on you don't have to be super picky where if there's, a tick or two or even a few pennies, and it's all relative, right? If you look at the Dow, it's an index at 41,000 points. If it moves up 5 points, that's going to have a little tiny shadow. And is it really that big of a deal? Not really. Of course, you look at something like Alcoa, that's a $33 stock, 5 points is a ton. So obviously it's all relative. You got to remember that part. So that's a bullish candle, right? You can see that's a shaved bottom. Not quite a Maribozu, but close. Then there's a bearish candle, right, where it opened at the high, closed at the low. And you can tell that just because one candlestick is bullish or bearish doesn't necessarily mean that it's going to keep going the next day, because both of these have done the opposite the day after. And then we get a spinning top, which we'll get into in just a second, because some of you probably have seen that. What does a spinning top mean? It's an indication of indecision. In other words, the bulls and bears have fought it out. I use tug of war in my mind a lot of times. I come up with these kind of goofy analogies in my head to give me a visual of what is it like to basically understand and interpret how things are working out, right? It's a sign of indecision. The bulls and bears are tug of war. Nobody's in the pit, and they're just going back and forth, right? You get a little yank this way, a little yank that way, just back and forth, no big deal. It's a tie, essentially, right? The buzzer might go off, take a break, it's a tie. Those are some examples of spinning tops. They're basically just a small real body. The size of the shadows is not important. Not with regard to the indecisive part of it. Now, can we use the size of the shadows to interpret them at a deeper level? Yes, of course. If you get massive shadows on both sides, then where there was one, what was that yesterday that I saw? I think it was on my list of candidates. We'll go through there and see if I can find it. If you have a huge shadow way up on the top and no shadow on the bottom, that is an indication, right? That tells us who was winning at one point, but then who ultimately won at the close. So there's just a bunch of examples of spinning tops. You can see they happen all the time. So they're not, I mean, how many are there? 4, 8, there's 12 right here on this chart. That's about 3 months of time, maybe. So you can see that spinning tops are very common. They happen all the time. So they're not one of those things you're not going to put a whole lot of emphasis on and be like, oh my gosh, a spinning top, it's going to go the opposite direction. Which one thing to remember when it comes to reversals, especially with regard to candlesticks, the term reversal is a misnomer. This is one thing that I cover in Patterns that Flash. Reversal doesn't mean it changes on a dime and goes the opposite direction. It just means change of direction. Well, stocks move 3 directions, right? They move up, down, and sideways. So if a stock's moving up and you get an evening star or a bearish engulfing pattern like we had a bunch yesterday, that doesn't mean that the stock's going to turn and just go the opposite direction. It essentially means that whatever trend, whatever move was in place ahead of it is probably going to end. And we can kind of, well, we're only a couple hours into today, but as I say, you can kind of see that today we had a bearish engulfing pattern yesterday, and it hasn't necessarily, obviously things didn't turn on a dime because we gapped up this morning. Then when Powell came out and talked, the market liked what he said, which I think is goofy, but whatever. So it ran a little bit, but now it's starting to sell off though. So a doji, what does a doji mean? Indecision. It's a tie. Tug of war. It's the same as with a spinning top, right? But the difference is that it is more indecisive. It is more of a tie, if you will. I mean, if you're in a tug of war and the end of the bell's coming and the bear's right on the edge of the pit, but they don't get pulled in, it's technically a tie because the end of the period came and nobody technically won. But the bears were closer to the pit than the bulls were, right? So that's more of a spinning top. A doji is they were equidistant apart. They were equal distances from there. Nobody really got even close to winning. It was a complete, utter tie. Now, generically speaking, and in a lot of ways, I like to look at things just from a concept perspective, 30,000 foot level, if you will. Oops, I know Rob hates that term. He's not here, is he? I don't know why, but the smaller the body gets, the more indecision it shows us, right? So if you get a perfect doji where it opens and closes at the exact same price, that is absolute pure perfection when it comes to indecisiveness. The bigger the body gets, the less indecision there is. Right? I mean, it's should be pretty obvious, but sometimes it's not. And I think, like I said, I like to look at that because then when you go, well, it's not a perfect doji. Well, is it close? Okay, close enough. How close is it? Is it a spinning top? If it's a spinning top, how close to being a doji is it? In other words, I look at things on a sliding scale, if you will, or gauge it based on the size of it. So the smaller the body becomes, the more indecision it indicates. And the dojis should be pretty obvious, open and close at the exact same high. So any questions on any of that? I mean, it's like I said, it's very basic, very, very simple. Like the SPX is doing right now. I guess it kind of is, huh? I got to go. I have to look at the spiders, but it's basically the same thing. And that is today, right? Yeah, 23rd. Yeah. So we don't have a mega charts. So this is a streaming. It has a streaming feature, but it's 15 minutes delayed. So it's moving. You can see up in the right corner, the price is ticking, but the time is 9:07. That's West Coast time when it's really 9:22. So it's 15 minutes behind. So it's not live streaming. It's just streaming. It's a delayed streaming. There's the technical term. But since we're here, we'll zoom in. And this is where I kind of wanted to go today. We got the basics down, but as far as interpreting these candlesticks, I want to find that one. But so what do we interpret as of now, today at least? If it closes like this, which who knows what it's going to do, it actually looks like we're, at least Disney's gotten crazy. So is McDonald's. McDonald's has accelerated to the downside a little bit, but I have a feeling we're going to sell off into the close, but gut feeling is not necessarily a good thing to trade off of. So sometimes it works, sometimes it doesn't. I don't do that very often anymore. Sometimes I do. It's like, this is my gut feeling. I'm just going to go with it. Pretty rare, but sometimes you just have it. Sometimes you go with it and you just decide, okay, this is what my gut's telling me. How much risk am I willing to take with it? Am I okay with that risk? Yes, I am. Boom, pull the trigger. So turn on live streaming. I can't just turn it on with Trade Now, but I do have my toss running. So there, I'll pull that down from the other monitor up there. So this is what I have. This is what I use to monitor all four of the markets. I just have these they're just little ones up there so I can see what they're doing. I'll make it a little bit bigger here so you can all see it. But so we've got and I've got the daily, the right-hand side column is the daily charts. The left-hand side is 5 minute. So I can take a quick glance to see what all the market, got the SPX at the top. And it's hard to see. It's a little bit squeezed down. We maximize it. That's a little easier. But so this is a live streaming, right? This is right now what's going on. We're sitting right at 56, actually. I just noticed that. I think if we make a decent breakdown there, and that's a daily chart, but let's see what 5 minute looks like. And I'll just preemptively answer the question in case you're thinking of it right now. Well, this is a 5 minute chart. Is it any different on a 5 minute versus a daily? Nope. The only difference, as far as interpretation, what patterns look like, what candles looks like, how to interpret it, it's always the same. The difference, obviously, is the time frame, right? If you're trading off of a 5 minute candle, if you're looking at daily charts and you get into a trade based on a candlestick pattern, and most of the time, candlestick patterns play out 1 to 7 days. If you're trading based off a candlestick pattern, it's 1 to 7 days on a daily chart. On a 5 minute chart, that's going to be 5 to 35 minutes, right? So you have to do it based off of number of candles, not number of days. That's the only thing you have to transition, which isn't that big of a deal. You just have to get used to it. It doesn't take that much. It's not that difficult, but so yeah, that's one of the beauties of technical analysis. Once you learn it, and I've said this for years, once you understand how to interpret the basics of it, then you can translate it to any time frame. You can trade any instrument, right? If you want to trade Bitcoin, if you want to trade commodities, you want to trade futures, you want to trade Forex, you want to trade currencies, the charts are just the visual representation of how traders feel about that particular instrument. I've never looked at bonds, charts of bonds, but I'm sure you could use it for that. I have played with currencies years ago. I tried them. It was wild and crazy. If you want something super volatile, super fast, currencies are the way to go. Because I just threw a couple $100, and this is, I don't know, 15, 18 years ago. I threw a couple $100 in the account. I'm going to play with this a little bit and see. And I got into a trade, my first trade. I think I put the whole $200 in there. I was trading I don't remember what it was even. And just watching charts. I just brought up charts. Didn't really understand the instrument that well. Just understood how to, go long or go short. And I literally got up, ran to the bathroom real quick because I'm on edge. I didn't have as good emotional control over myself then as I do now, but I was like, because I didn't have a stop in. I don't know if I could even do one back then, but I literally got up, ran to the bathroom as fast as I could to come back, make sure I didn't blow myself up. And I was gone for 60 seconds, maybe. And I came back and I was up $200. I doubled the account. Literally the time it took to jump out of the chair, run to the bathroom. Number one, wash the hands, go back 60 seconds later, maybe 90. And I've doubled it. I'm like, woo, cool. And then gave it right back. Super volatile. It was crazy. So I didn't play with currencies anymore. I might at some point, but probably not. I've started fooling around with futures a little bit in the last year or so, but so I want to get rid of that and put this back up where it belongs. So, but this is, for the purposes of what we're doing here today, this will be sufficient. We don't need streaming live. So how do we interpret the last few days? Because this is where technical analysis can get really powerful, is when you understand not only the basics, the support, the resistance, trends, patterns, recognizing patterns, seeing the Western patterns, and then you combine that with candlesticks, knowing how to interpret the candlesticks, knowing how to recognize the patterns, what the patterns mean, how to read them, how to analyze them, then you can start to put this picture together, right? It's much like doing a puzzle. And you're taking the pieces of the puzzle and putting them together and going, okay, what does this picture look like? What is likely to come next based on what the pieces of this puzzle load are together, right? It's like Wheel of Fortune, if you will, right? You're putting out, you're guessing in letters, trying to figure out which one's coming, and then you got to try to figure out and solve the puzzle. So that's essentially all trading is. Well, it's not all trading is. That's all technical analysis is. Trading is more emotional management and trade management than anything. That's what trading is. Technical analysis is putting the piece of the puzzle together. So that's interesting. I never thought about it like that. Compartmentalizing and go, okay, reading charts is this part, and trading is actually here. If you separate them out, technical analysis is the puzzle part. Trading is managing the trade, managing your emotions, managing the numbers, if you will. So, and obviously they're intertwined, but it's important to have both, clearly. So, interesting is, as of right now, we've got this Harami pattern showing up. But you can see 3 days ago, this candle right here, right? We gap up, rally up. At some point, the bears came and pushed it way down. So you got a long lower shadow, which to a certain degree is bearish because this is a hangman-like type of pattern. Shadow maybe a little longer than I'd like to see, but a hangman type of pattern is also somewhat bullish because when you look at just this one candle, right, we actually gapped up. So the bulls had control in the morning. The bears pushed it back down here to whatever that low is, 554.73. But by the end of the day, the bulls had rallied it back up and closed it higher. So the bears took over at one point and had dropped it off quite a bit. But by the close of the day, the bulls had pushed it back and closed it in the green and up and not too far off, a lot closer to the high than to the low. So looking at just this one candlestick, it's pretty clear that by the end of the day, the bulls had control of this. And then yesterday morning, it gaps up. They clearly had control, but not for long because it ticked up a little bit and then sold off the whole day. And sure, it bounced a little bit at the close, which was probably just some short covering, right? Because if you're a day trader, if you're shorting the stock up here, at the end of the day, you're like, hey, I've made a nice profit today. I'm going to close my shorts, right? And if you cover your shorts, that creates buying pressure. So just understand the basics and be able to interpret it like that. Go, okay, who's in control? Who's winning the tug of war? Similar here, right? You got a day here, bearish engulfing pattern, right? We gap up in the morning, rally up a little bit, and then sell off the whole day. So, yeah, I did say Harami pattern. Harami, however you pronounce it. I don't know. It's like somebody else's name that can't figure out how to say it right. Yeah. What is a Harami pattern? You all need patterns in a flash, that's for sure. Little shameless plug there. No, that's what we're here for. This is what's good. So Harami pattern is the Western term is an inside day. I don't know how many of you have been around as long as I have, but in the old days, there's Western patterns, right? And then there's the Japanese candlestick, which Greg Nissen was credited. Was it Greg Nissen? No, Steve Nissen, not Greg Nissen. I'm thinking of Greg. Who's the Greg? There's a Greg guy and there's Steve Nissen. Again, it's been 15 years since I've even seen these books. Steve Nissen is the one who is credited for bringing candlesticks over to the U.S., to the West, if you will. Greg Morris, thank you, Trip. Yeah, Greg Morris and Steve Nissen, and then seems like there's one other guy. But yeah, it's been a long time since I looked at those. So Harami pattern is Harami in Japanese apparently translates to pregnant. Oh yeah, Ryan and Greg wrote a book together, I think, or Ryan contributed to Greg's book or something like that. I can't remember exactly what it was, but yeah. So Harami apparently translates to pregnant. So it's kind of like a pregnant woman, right? Like my little sister, who apparently I'm going to have a niece feud next Friday. Sounds like. She just texted me the other day, said they're going to induce her next week because there's some minor issue going on. The baby's not growing or something like that. So I'm going to be an uncle again, which is good. So we didn't think she was going to have kids. So it's cool. Thank you, Jennifer. Yeah, it was interesting. I just found out this last Christmas. I didn't even know they've been trying for a couple of years. I guess she had a few miscarriages and they were going to do IVF and then it stuck, I guess. So, but Harami is, yeah, I mean, it's funny because talking about a Harami takes me thinking about my sister and having a baby next Friday. So I'm gonna have to make a trip down to Portland to go see whatever it is. She texted me the week before and said something about there, along, kind of filling me in on what was going on. And then she said there, and I'm like, there? What do you mean? Like, are you giving it its new pronouns? Because they don't know if it's a boy or girl. They're not finding out. They're going to be surprised. And so the way it read on text, right? It's the danger of text. The way it read is that they're like they are. And I'm like, are there more than one? Like, did I miss something here? Are you having twins, triplets? What's going on here? So she's like, no. We just don't know if it's a boy or girl. So I just used they instead. I was like, okay, whatever. Yes, it is, Brenda. So yeah, Harami is, I mean, what we have right now, going right now, we don't have the close yet. So that last candle, if it closes where it is right now, we'd have a Harami pattern. This also right here, so it's a 2 candlestick pattern, right? That also is a Harami pattern. So you have one day, you have an inside day. So this body and candlesticks for the most part, it's the body that we're really, when it comes to patterns, it's the body that's important, right? The shadows don't usually mean a lot when it comes to patterns. They mean almost nothing actually when it comes to patterns. It's good to know what they mean. Obviously, it's the high and the low, so you can interpret what it means, right? But that's essentially a Harami pattern as well, right? Kind of like these 2 candles down here, especially this one. Because we gapped up in the morning, rallied way up to the high. We closed that window. We filled that gap there, and then it sold off. So that big, long shadow could easily be interpreted as bearish because even though we were up for the day, we were really, really up for the day. By the end of the day, it had to drop back down. So, and again, this is just interpretation. We're just looking at what is it telling us for the short term? What might it indicate? We don't know what's coming next. None of us have a crystal ball. So there's no way to get a definitive thing, say, well, a candle like this means that it's going to go down. And you can see the next day it didn't. It actually gapped up big time because the close was down here at what, 522, gapped up to 528 the next morning and then sold off. So there's no way to know. I see these ads. I see this ad on Facebook and this guy's like, or maybe it was YouTube or something like that. What if there was a way to know what's going to happen the next day? And then he says, well, there is. And I want to wring people's necks because it's like, there is not, you don't have a crystal ball. You don't know what's coming tomorrow. There is no way to know with certainty. Can we look at something and say that based on this information, the odds are that it's going to do this tomorrow? We can, but there is no way to definitively know what is coming next. Nobody knows. Can have some information. I talked to a guy yesterday that was, he's in cybersecurity and he was on CrowdStrike. We just happened to be short on CrowdStrike because of a double top, but then the news hit when it went down, 2-3 weeks ago. And I was like, so you can't get nailed for insider trading, huh? He goes, no, I'm not an insider. So he knew what was coming. He shorted the stock. And I was like, well, I just got lucky. He knew. I just got lucky. It happened to be there. But so yeah, that's a Harami pattern. Does that make sense? And it's a reversal. Again, a reversal doesn't necessarily mean that it's going to turn on a dime. As you can see right here in the last few days, we have a Harami pattern. And then the next day, right there, is it's technically a hangman, right? Because a hangman, the lower shadow needs to be at least 2, if not 3 times the size of the body. We've got a small body, essentially a spinning top, right? The upper shadow, it's a little bit longer than I would prefer it, but it's not that big of a deal. And then we get a bearish engulfing pattern yesterday. Today, if we close here, depending on how we close, obviously we still have 3.5 hours to go. If it closes like this, we have another Harami pattern. So we have a big rally up, Harami pattern that says, well, we may not reverse and turn on a dime, but we're going to slow down this trend. This trend does not have legs. And at this moment in time, it's playing out. So will it break north from here? Will it just stall out and then break north? Don't know. That is, I'm coming back to your comment, Jennifer, about being frustrated. Yeah, we're kind of at an inflection point. So it's good that you recognize you're frustrated. I mean, noticing your emotions and how you're feeling is good. So, and I'm surprised we're as high as we are. But again, if you look at the volume, you've got a big volume move to the downside. And then the volume's getting lighter and lighter as it rallies. So that's a bearish indication. Does it mean it's going to turn? No. Does it put the odds more on the bear side? Yes. But could we come up here and stall out at the high and then just go sideways for a little bit, catch our breath? Because if this is a hill right here that I just ran up, that's a sprint up a very steep hill. I'm going to have to catch my breath. I'm going to spend some time because that's a very steep hill. It's a very fast run. I got to catch my breath and be like, wait a minute. Whew, am I going to keep going or not? Do I have enough energy to keep going or not? And right now the market is just resting. The last 4 days are essentially resting. And it's starting to indicate that it's not only just resting, but it's also tired and might start rolling down the hill. Cheers to that. So yeah, it's kind of a waiting point right now, Jennifer, at least for me. I'm kind of like, I mean, I've got some positions on, but this is just the overall market, right? We're looking at the spiders so we can see the intraday move. But right now it's kind of a waiting game to see which way it moves, which way it breaks. I'm of the opinion we're going to break down, but that's me. And I was wrong. There's another guy that I'm friends with on Facebook. He seems like a good trader. And I had puts on McDonald's and he said that he posted something about buying calls. I'm like, what'd you do that for? I've got puts. Well, he was on the right side. I was on the wrong side. I got stopped out. He made a profit. I'm assuming he got out, but it's, that's the thing. And he's a good analyst as well. He's a good technical analyst. And, we both saw different pictures and I went one way, he went the opposite, and he ended up making money and I ended up taking a small hit, but that's the nature of the beast. That's the way trading is. We don't know what's coming next. So yeah, patience usually pays off. It is, Not always. Sometimes you're patient and then it takes off without you and you're frustrated, which is easy. Frustration's like a constant in this business. That part never goes away. It's always frustrating. Like, how come I didn't see this beforehand? How come I didn't see it before? Why didn't I get in? And again, it's easy to see it after the fact. And I go back to that. Well, I remember I was on Benson a couple of years ago, and the guy on there, most of these guys they're relatively new. They're young guys, and they haven't been around for 25 years trading the market like I have. They haven't seen the crash. They haven't been through the crashes. And he's like, I remember Spencer was like, well, why don't you just do this right here? Why wouldn't you just get in right here and get out right there? I don't know. I don't see any good example here, but say like down here, he's saying, well, why wouldn't you just get in here and get out there? And then I backed up the chart. I went, okay, you look at that right there and you tell me that you would have gotten in right there. Looking at this information, not knowing what's coming next, tell me that you would have entered the trade there. He's like, oh yeah, I see what you mean. Because it's easy once it's already happened to know what took place. It's easy to Monday morning quarterback and go, well, woulda, shoulda, coulda. It's not so easy when the bullets are flying. Right? It's a whole different ballgame. And it's, a lot of people get stuck in that trap. You watch the news and, well, why did the cop react that way? You ever been in a gunfight? I haven't. I have no idea what it's like, how intense that situation must be. And not knowing what's coming, not knowing what this volatile person may or may not do next. So you have to do what you have to protect yourself and do the right thing. And, it's intense in that situation. Just like I've got some good friends that are, I don't watch football anymore, but I played it when I was younger, and they've never played. They've never suited up, putting on gear and get on the line and have to do this and do that. And they're sitting there screaming at the TV, like, why didn't you do this? Oh, you should have done it. Have you ever been in the trenches in the heat of the moment and not react? That's why in the military and football and sports, they train, right? You train so you don't have to think. You just react. You just respond to whatever's going on. And sometimes it's right, sometimes it's wrong. You don't know till after the fact. Trading's really no different. And it's easy, like I said, it's easy to see after the fact when the play's already played out what should have been done. It's a whole different ballgame. So when things don't go the way you expect them, and that's where the analysis part is putting the pieces of the puzzle together. The trading part is, here's the piece of the puzzle. I got to put the odds on my side. Here's how I manage this trade. Here's how I execute this trade based on what the puzzle looks like. And you're going to be wrong a lot. And that's okay. If you structure your trades properly and you do the things necessary, then being wrong a lot's not a big deal. The best baseball players on the planet are wrong 70% of the time. They're not wrong. They just swing the bat. They don't hit. Because swinging a bat at a ball coming at you 80, 90, 100 miles an hour, a little tiny ball this big with a bat, getting around on it in a split second and hitting it is not exactly an easy task. And I use that analogy all the time. I use batting as one because it is the closest thing, and it's the thing that most people understand from a sports perspective, I think. It's easy to see. And you can't ever make a profit if you don't get out of the dugout. You can't hit a home run if you don't swing the bat. You've got to step in the batter's box and you got to swing. But you analyze the situation first, right? Who's the pitcher, right? You think we'll watch all kinds of film on each individual pitcher that's going to be throwing that game and how they throw, what's their specialty pitch and how they do this and how to. So now when they step up to the plate, they have some knowledge and understanding of what might be coming. And then you look at what inning is it? What's the score? What's this? Where are we at? Are we a home field advantage? There's all kinds of little things that play into it. And it's a very strategic game. Most sports are very strategic, just like trading, right? It's very strategic. You've got to analyze the situation, go, okay, what do we have here? And what might be coming next? And based on that, I'm going to make a decision and I'm going to swing the bat. Here's what I expect, right? So that's effectively all trading is. And for me, at least, I like to use those analogies because it's something I knew. I grew up playing baseball and all, baseball, football, basketball, soccer. I grew up playing all those sports. And so it's easy for me to relate to and understand that this is what trading is like. So I put them in the same box, go, okay, this is what it's like. Because I remember stepping up to the plate, swinging the bat and striking out and watching pitches go by like, can't believe I watched that pitch go by. I should have swung. Can't believe I watched that trade go by. I should have pulled the trigger. I had one last week that I pulled the trigger on. I got out too early, left $1,500 on the table in 30 minutes. Like, woulda, shoulda, coulda, right? But it's the nature of the beast. No, Les, it's an interesting question. Um, I think in the middle of he's asking about politics, basically, and I don't want to go, you don't want to get me down that rabbit hole. Do you think the conventions have an effect? Are they waiting to see the end of the DNC? I think the overall markets, I think the conventions don't play at all into the market. The market's wondering, the market's looking at the economics of things. And granted, obviously, politics can have a major effect on that, but just having a 1 week event doesn't mean a lot. It's not skewing anything as far as politics go. Now, will the election itself probably have a major impact on the market? Yeah, I think it will. In this case, especially. Because, let's face it, and I don't want to go again. No, Kamala's not much of a free market type of person. She's wanting to tax unrealized capital gains, which is ludicrous. That would absolutely destroy the market. The market would absolutely crash. Absolutely would crash. I can say this with virtual certainty. If Kamala gets elected, the market will absolutely tank. Unless for some reason she backs off her rhetoric about taxing unrealized capital gains. And you have all these goofballs out there saying, well, if you're not making more than $50 million a year, first of all, wealth and net worth is not the same as earnings. Some of these people literally, it's scary to me how ignorant some people are, that they think that net worth and earnings are the same thing. And people post these things, well, so-and-so Jeff Bezos lost $20 billion today. He didn't lose anything. He didn't have it to begin with. The stock valuation creates the net worth, right? If the stock valuation drops 20%, his net worth is going to drop by close to 20%. So it's very different. Income and net worth are different. And capital gains and realized and unrealized are vastly different. You're going to have literally, Bezos fled Washington because of the moron governor here who implemented this stupid tax. He went to Florida because these people can't comprehend that Bezos has enough money to buy the moon, essentially. And he doesn't need to stay here in Seattle. He can go to Florida. He can fly back and forth anytime he wants on his private jet in probably 4 hours. It has no impact on him whatsoever, except by moving to Florida, he has saved $600 or $800 million in taxes. It would have gone to Washington State if they weren't so dumb. They'd change a stupid policy and are trying to screw over rich people. They just leave, and they will leave the country. In 2009, we were doing a workshop in Ireland. I didn't know this, but there was terrible corporate tax policy. Microsoft, somebody over there in Ireland told me that Microsoft had their largest stash of cash in Irish banks, something like $8 or $10 billion. They were in Irish banks because Ireland changed their tax structure where it was more favorable to corporations. So they moved a huge amount of their wealth over to Ireland. So now Ireland was capitalizing on the taxes from that instead of us, which is just like, you can't tax the people that produce more and more and more and suck out more of their wealth when they can leave. They can just go somewhere else. Anyway, thanks, Les. Get me all fired up. But the reality is, I think the election, whoever wins the election will have a major impact on the market. I think if Trump wins because of his economic policies, whether you love him or hate him, and I think it's with like everybody, right? I don't know how many of y'all are married. You've all probably been in a relationship. Did you love everything about the person that you were in a relationship with or you're married to? Probably not. I don't love everything about Trump, but his economic policies were effective. They worked, right? And the ones they're implementing now are not. So, and I have to get into some of the regulatory junk, which is horrid under this administration. They are, it's not necessarily this administration. It's pretty much all administrations have been. The government's getting too big. There's too much regulation. There's too much to deal with. There's too much. It stifles business. It's bad. It's bad for business. Anyway, See, I don't think, I mean, go back to your question, the conventions themselves, I don't think are having an impact at all. But the overall election, I believe, will have a dramatic impact on the market. And I do believe it will absolutely tank if Kamala gets elected. Trump, it's kind of 50-50. I think the market would probably have an initial reaction. And a lot of it depends on what happens between now and the election, right? I mean, if the Fed starts cutting rates, which the funny thing is that historically, when the Fed cuts rates, that's when the market starts to go down. Because that's the old buy the rumor, sell the news thing, right? Everybody's been buying stocks based on this idea that cuts are coming. And so they've been driving them up. And then when the cuts come, right, you're buying into the fact that earnings are going to be good. And the earnings come out are good and it sells off. So historically, when we're either in a recession or starting to do a recession and the Fed cuts rates to try to fight the recession, stocks usually drop then. So nobody knows what's going to happen. There's little doubt that the Fed's going to cut at least a quarter this next month. But I don't think that's going to have a major impact on the market. I really don't. I think actually the market will probably be like, they're just yawning because it was expected, right? The market doesn't react to the news it reacts to the news once it comes out, but it's already built in. So when the market's expecting something, when it's announced, it's not a surprise. So you got to keep that in mind. The way that generally people think, you understand just a basic human psychology. That's what happens, right? If you're anticipating something coming, if you're anticipating a $50,000 check in the mailbox, when it shows up, you don't act all surprised, right? You're like, oh my gosh, I can't believe I got a $50,000 check. You were expecting it. You knew it was coming. So it's like, okay, it's not a big deal now. I've known for 2 weeks it's coming. Right? So who cares? Excuse me. That's a good point. Trip says, yeah, if it doesn't come, all hell's going to break loose. True, right? You're expecting it doesn't happen. That's when riots happen, right? And no matter who wins the election, I think it's going to get ugly, especially if there's any, if there's anything that looks like it may have been, I don't want to say unfair, what's rigged. I don't know if rigged's the right word or not, but if there's anything that makes it look or appear that way, that it's been manipulated, I think all hell's going to break loose from either side. I'm not talking about one side or the other. I'm going to have my biases, obviously, but I don't think it's going to matter who wins. I think it's going to get ugly after the fact, most likely. So I hope it doesn't. I'd like to believe that it's not going to, but again, just understanding human nature and how people are. So Spider's looking like it's on the way to filling today's gap. What gap? You're talking about intraday? Is there an intraday gap? Those guys weren't out. All the lawn care guys. Hopefully you guys can't hear that. It's driving me nuts. So they're out blowing the grass off, mowing the neighbor's yard. Lazy people. Go do it yourself. No, I'm just kidding. I love them. They're awesome. Identify, enter, manage, exit. I like it. Said it was sort of stalled this week. Oh, the market. Oh, I just noticed your comment there, Les. Yeah, it has stalled this week. I mean, when you look at the candles. But can you correlate that with the DNC convention? I mean, you can. I don't think they're correlated. I don't think you can connect those dots. I mean, you could, like I said, you could do anything you want. And that's one thing I think that it's easy to do. It's human nature for us to want to connect things, and whether or not they belong connected or not is the question. So yeah, I mean, you look at the last 4 days, today included. I mean, Monday is the big up day, and then we get the little, spinning top Tuesday, Harami, if you will, then a hangman on Wednesday, bearish engulfing pattern on Thursday, and today at this moment in time, we have a Harami pattern forming. Who knows how it closes? I mean, we could break out and close up higher here. We could break down and close way down here at 550 and have this, another big day. We don't know. So, intraday gap. That's what I thought you were referring to, Brenda. But so yeah, that's the Trip just made a good point. Correlation is not causation. right? So that's one thing we have to be careful of as traders is not, and I used to do it when I started. I remember I was I've told this story a bunch of times, but it's one of those memories that I have is clear. I was maybe 2 years into trading, if that. And actually, I don't think it was. I think it was one of my first trades I did on Intel. I bought an Intel because it's been getting hammered. It's going to go back up. And it didn't. It just kept falling. I bought calls because I didn't know we were in the middle of a crash. I literally started at the very peak of 2000. It was one of the biggest intraday drops in the NASDAQ's history the day I was sitting in a workshop. And I didn't know. I was 24. I was young and dumb, and now I'm just old. But none of my coaches had experienced a crash either. So we were in the middle of a crash, but everybody kept looking for the bottom, trying to catch that falling knife. And I did the same thing. And I remember watching, there was some report came out on CNBC about Intel. I remember thinking, oh, sweet, this thing's going to go up and I can come out profitable because of this news. Well, the news didn't, even though it sounded positive, it did not correlate to a bullish move in the stock. Apple's another good example, right? The first iPhone came out and sales were absolutely bonkers. So the stock went crazy. And then every single time iPhone did a release after that, people got all excited. Oh, iPhone's coming out. It's going to run. The stock's going to run. And for 2 or 3 cycles, it did that. Maybe 4 or 5. I don't remember exactly. It's been a long time ago. But because of the one time, people all of a sudden went, oh, well, every time iPhone comes out with a new release, it's going to make the stock go up. And that wasn't true. There were times after a few of those cycles, a few of the upgrades were coming out. The market just yawns, right? They're like, this is old hat, right? We did it last few times, but now they start to sell off, actually. So you can connect the dots for certain events and certain situations, but you can't continue to connect them all the time, if that makes sense. So, oh, yeah, that Project 2025 has been debunked. It's not connected to Trump in any way, shape, or form, never has been. And I knew that because when some Democrat friends that were pushing it, they're like, oh, look at this. And I'd never heard of it. And you'd think if it was something Trump was behind, I would have heard of it. When they're the first ones pushing it and saying, look at this, I'm like, no. So yeah, it's not, Project 2025 is not a real thing. I mean, it's a real thing that somebody put out, but it wasn't connected to Trump. So that's the scary part is we don't know what's true anymore. And AI is going to make it worse. Because how do you believe your information? And I try to gather information for as many sources as possible and then make up my own mind. But it's, Heritage Foundation apparently put it together. But it sounds like it was just some isolated people in there. And I looked at it a little bit, but it's, I don't know. That's the hard part is what do you believe anymore? So. And that's the scary part with AI. I was watching the interview with Mike Rowe. And he said that somebody put together this AI conversation between him and somebody else. And he goes, it sounded just like me. You would never know. He goes, if I didn't know there was an AI thing put together ahead of time, I would have thought it was some interview I did in the past. Because it sounded just like him, the cadence, the words, I mean, the voice, the way he talks, because we all have this unique way of talking, right? Just like I do, everybody does. So, that's the scary part is how do you know what's true? How do you know what's not true? And talk is cheap. Talk is easy. It's easy to say, I'm going to do this. I'm going to do that. And the question I would have is, why haven't you done it so far? If you've been in office, why haven't you done it? So if you've had the opportunity for the last 3.5 years to do it, why haven't you? Now you're saying that, oh, we're going to do it. We're going to do it different now. Once I get elected, once I get promoted, it's like, yeah. It's like I've seen this meme lately. It's like if you are going to hire somebody 3.5 years ago, they don't do a lot. They don't really do their job the way they're supposed to. And then they ask you for a promotion. Are you going to give them a promotion? Like you haven't done what you said you haven't done the job so far. But I thought it was pretty funny. It's pretty clever. So CBDC, I don't think that's ever going to come to fruition. I mean, it could, I guess. I certainly won't use it. I can tell you that. Absolutely no way. I would not touch it with a 10-foot pole. And if they force it on us, Yeah, there's going to be a whole black market underground. It's getting a slippery slope because nobody wants to be tracked. Nobody wants the government to know and manage and have control over what they can and can't spend money on. CBDC is, as far as I'm concerned, it's dangerous. It's gross. I don't like it. We're supposed to be a free country. We're supposed to be able to do what we want. And when you have government entities, and I think they've already proven that they're capable of doing some pretty underhanded stuff. I've been watching a lot of history stuff lately with the CIA and the FBI, and I mean CIA have overthrown foreign governments. They did it in what was it, Ecuador or something like that back in the 60s or 70s. So why wouldn't they do it in this country if they have the ability to? And technology just makes it easier for them. So it's a slippery slope, and it's one of those things. Yeah. Um, CBDC I think is a terrible idea just because of that. Like I said, I don't want the government knowing. I mean, they could probably find out now. They could find out now if they wanted to, but there's no reason to give them easier access to what it is that I'm doing. Central bank digital currency. I know you were thinking it was some kind of like weed, right? CBD. It's legal out here in Washington, so CBD, yeah, central bank digital currency. It's the government's Bitcoin, apparently. It's what they're going to create, which they kind of do that already. And I think I don't know if Jay Powell said it. Somebody from the Fed said it was like, yeah, I mean, they print money. They just create a whole bunch of digital currency, and then they send it to the printer. They print it off in paper money, but it's kind of sort of already there. But as far as using it to exchange money for me, heck no, I don't want any part of it. Just because, like I say, I mean, the amount of control that the government has over our lives already is already scary to me. And I want less government, not more. So that's one reason I'm not a fan of Kamala. She wants more government control, more bureaucrats, more telling us how to live our lives and how to do things. And as far as I can tell, it looks like Trump wants the federal government out of more things and give it back to local and state governments, which is where I agree with. That's how the country was founded. Local and state governments have control because they're local. Obviously, every demographic, every area is different. Let the smaller government control what's local. Federal government should be minimal as far as I'm concerned. So I'm more of a libertarian and independent than anything. And I want less federal government. I want less bureaucrats because they just cause problems. And I've dealt with them firsthand, and they're a nightmare in this business and in another business I started years ago that was just a nightmare. So constitutionalist, I guess that's a good way to put it. Yeah. Constitution, the way this country was set up, structured, and founded was spectacular. It was small federal government that protects us from foreign entities and leaves us alone. And that's pretty much all they do, right? They're there to protect our rights and protect us physically from bad actors. That's about all they should be, but they've gotten their hands in too many things, I think. So it's gone down that road. So I think we need to get back to basically what the Constitution was intended for. So, which is more freedom and not less. So, and one side is going one way and one side is going the other. So, we're done with class. I know. I just noticed actually it's over. I just realized I'm 4 minutes over actually. So, yeah, exactly, Trent. Most of it's not even printed. It's just electronically transferred from one place to the next. So, yeah, back to when politicians was a part-time job. It didn't used to be a full-time thing. Now it's a living. It's not only a living, it's a way to gain wealth. You become a politician, then you have inside track and you can get super wealthy by doing that. And then to hear them rip on wealthy people like Michelle Obama and Oprah, one's worth 70 million, one's worth 3 billion, and they're talking about how the rich are oppressing you. It's ridiculous. Anyway, that's all your fault, Les. Yeah, exactly. Save the climate. Well, I burn more in my one trip on my private jet than you'll burn in your entire home for the entire year. Yeah, it's hypocrisy, unfortunately, which is part of human nature. So, what do I think about the rest of the day in the market? This is an easy one, Brenda. So, thank you for giving me an easy question. It's either going to go up or it's going to go down. And I'm sorry for being a smart aleck, but not only was that the way I was born. I mean, I've been bearish for 3 years. The last year and a half has been a surprise to me, but it makes sense though too. And that's one of the benefits to trading short term is that We don't have to be concerned with the macro picture. What I believe about, the fact that I think we're headed into a bear market, I think there's a high potential the market could crash. That big picture view doesn't affect my short-term trading. I get in and out, based on what the chart says, but I also have my macro view too, right? But yeah, what it's going to do for the rest of the day, I would say based on what we're seeing at this moment, it's going to continue to sell off, I think. But again, it really is 50-50. So, but yeah, just look at the chart right now. I mean, you can see the candle right there. We've got 4 days of bearishness. Today is continuing that. But maybe some news will come out later and the market will get all excited and rally to the upside. So sometimes news comes out like that. But just based on what we're seeing at this moment, I expect it to stay about the same, maybe go sideways or sell off. I think the odds are higher. This is probably the best way to put it. I think the odds are higher of it dropping than it is going up. So. Oh, oops. What? Oh, I just saw your comment, Steve. That's funny. Yeah, I wonder if he does too. He must, obviously. He seems like he's back in the mix. So I don't think he ever left. But anyway, I better shut up before I get in trouble. I think I've probably already gotten in trouble, but now I'm late too. So yeah, I don't think the cuts are going to do anything to the market. I think if anything, the market will sell off based on the cuts. Honestly, that's my opinion. But we'll just have to wait and see. Plan for it, prepare for it, and take the trade based on what you see on the chart, not what you think or what you feel. So it's hard to separate those sometimes, but that's the critical piece to it is here's what I see, here's what I think the odds are. Now execute that and do the best you can to manage your emotions well in the middle of the firefight, if you will. So, all right. Thanks for all coming out, having some fun, hanging out, and getting me in trouble. Learn to be really good at puts. Exactly. I would agree, especially in a market like this where I think the odds of a downward move are higher than an upward move. So I'm wrong all the time, Jennifer. So you're in good company. So and it's one of those things you just get used to. It's not that big of a deal. And if you really actually track how often you're wrong, you'll start to actually enjoy it. You'll be like, I was wrong. Cool. Just like McDonald's. I was wrong. I'm sure some moron's going to come out and be like, I can't believe you were wrong. You got killed on McDonald's. No, I didn't. I stopped out. I got a little lost. So what? The other guy made money. We were both on opposite sides. I was wrong. So what? I don't care. Being wrong doesn't mean anything to me anymore. I don't care about right or wrong anymore. So anyway, you too. Y'all have a great weekend. And we'll see you actually next week if you're at Trade U. I'll be there. So, all right. Take care. God bless. Bye-bye.